This is Caleb Jones, and this is Alpha Male 2.0, freedom-focused lifestyle design for men. If you are new to the channel, be sure to subscribe. We do 5 videos a week here on how to make your woman life and your business life more free, because you need both. A while back, I was reading a thread on the internet. I don't normally do this because I don't have a lot of time to do these kind of things, but I was doing it. And a guy was recommending no debt, which is what I recommend. So part of the Alpha 2.0 financial model is to have no debt, with rare exceptions, which I will cover in a minute. But the Alpha Male 2.0, other than that, has no debt. I have no debt. It's awesome. When you have debt, you are slave to the lender. When you have debt, it is harder to survive down economies. When you have debt, it affects your cash flow. When you have debt, it is a psychological burden on everything else you do in your financial life. And if you didn't have that debt, you would be much more effective and much more happy, far more so than you know now. If you have a lot of debt, you just become used to it. No debt. And as always, in this thread I was reading, I saw the usual guys, and I get these guys too, when I say don't have debt, who get pissed off. And they say, that's ridiculous. This is so infantilizing. This is just ridiculous. You know, you can have credit cards and pay them off every month. You can do that, you know. And one guy was saying, you know, I've had credit cards for 13 years and I have never made a single interest payment in 13 years. So this thing about having no debt is bullshit. Or you have guys who say, but what about real estate? Rental real estate is the best investment. And how could you not have debt and have... All right, let me explain this bullshit. 2 things. Number 1, if you have a credit card or credit cards that you pay in full now, 100% every 30 days, and you literally never go over 30 days, that is not debt. When I say no debt, I don't count that. That's not debt. You don't really owe it past 30 days, so it's not debt. Well, technically it's debt because you... Don't get nitpicky about this. It's not debt. If it's less than 30 days and you pay it off, that's not debt, especially if you have a track record of doing that. Now, here's the problem with guys who say that. When guys like me say don't have debt, and these guys say, well, you could have a credit card and just pay it off every 30 days. What percentage of humanity does that with credit cards? I suggest you go look at the stats and go look at the percentage of Americans who get credit cards, who pay them off in full every 30 days. It is a teeny tiny fraction. If you are one of these guys who have used credit cards for decades on end and have always, every month without fail, paid them off, even in down economies, even when you get fired, even when problems happen in your life, you are a bizarre exception to the rule. You are an extremely rare exception to the rule, and I don't talk to extremely rare exceptions to the rule when I do videos like this. I'm talking to a lot of people, and most people do not have the organization, the emotional control, the wherewithal, or the consistent financial stability to do what you're saying. They just don't. If you can, that's wonderful. You're different, you're very rare, you're very unique, and it's not debt. So I have no problem with you getting some credit cards and using them to get airline miles, but paying them off every 30 days. As soon as you go over 30 days, and now you own interest, and now you start accruing a balance, now you're stupid. No debt. That's debt. Now, that's the first thing. Second thing, real estate. Yes, real estate is the best investment. I consider real estate a gray area between investment and business. It's not 100% investment. It's also not 100% business. So it's not something passive like Bitcoin or stocks or whatever, owning rental real estate. It's kind of a gray area, but yes, it's amazing. Real estate is very good. I have purchased and owned lots of real estate throughout my life, and I've done very, very well with it. You are right. However, just because you have real estate does not mean it is good. Just because you have a mortgage on a property does not mean that is good debt. I will tell you my definition of what good debt is. Because some people say, well, there's bad debt, good debt. And Caleb, you're oversimplifying it when you say that all debt is bad. I'm not oversimplifying it. I'm about to give you what the good debt is, and I'm going to demonstrate how rare it is. Just like these people who pay off their credit cards every 30 days. What I'm about to describe is even more rare. You ready? Here's my definition of good debt, okay? Definition of good debt, and I've mentioned this before in my online courses, so I'll mention it again, but I'll be very clear about this. It's very specific. That is cash flowing rental real estate or a similar cash flowing producing asset that has 50% equity loan to value minimum. So let me explain that. Cash flowing. That means it generates you an income every month. A lot of you guys have rental real estate that you actually have to feed every month. You fucking lose money on it every month, and you just figure I'll make it back when I sell it. Maybe you will and maybe you won't. That is not good debt. Owing a mortgage on a piece of property that you break even on every month, or you have to feed every month, is not good debt. We could have a big argument about, well, Caleb, I'm saving money on taxes, so it's okay if I break even on it. Well, Caleb, in 6 years, I'm going to sell it at 50% market, blah, blah, blah. We could have that discussion, and that's fine. That still doesn't count as good debt. There's too many variables involved with the real estate market, with the economy, and all kinds of other things that can fuck you, changes in the tax law, all those things. So having debt in those scenarios is bad debt, in my strong opinion. You can disagree with that if you want, but that's not safe debt. I would never have debt like that. Now that's cash flowing. 50% loan to value is the second piece to this. If you own a $100,000 piece of property, just for easy math, let's say you own a cheap house that's $100,000, you owe $80,000 on it. That means you only have 20% equity in that house. You have an 80% loan to value. That is bad debt. If a real estate collapse comes along, if a bad economy comes along, all of a sudden that $100,000 house can suddenly be worth $70,000 or $80,000, and now you're underwater. You're fucked. So if you own a $100,000 house and you owe $50,000 on it, so the mortgage is $50,000 or less, now we're in good shape. It's very unlikely for that house to go from $100,000 down to $50,000. So you're pretty safe there. So if you have a rental property where you only owe 50% of the value of that property on your mortgage, and that property spins off real income from you after taxes every month, then in that one teeny isolated scenario, that's good debt. That is valid debt for the Alpha Male 2.0. Other than that, no, it's shitty debt. And you shouldn't have it. I would never own rental property where I owed more than 50% of the current value or it didn't cash flow. I would never have debt like that. Never, ever, ever, never, ever. I promise you I wouldn't. Unless the scenario was highly unusual. And in this era right now with coronavirus and the collapsing Western world, I don't plan on doing anything highly unusual with my real estate money anytime soon. So that's the deal on debt. Yes, those are two very rare, unusual exceptions to having good debt. Other than that, no fucking debt. And don't listen to these guys who talk about, well, there's good debt and bad debt, because I'm sure these guys who say good debt have a much broader definition for a good debt. A lot of these guys just say, if you have a home mortgage, if you have a mortgage on a house, then it's good debt. Wrong-o. Are you fucking kidding? Wrong. Do you know how many people I have personally known who got murdered on their property values and got underwater on their homes when the real estate market took a dump, or when the economy took a dump, or when they had trouble with their jobs, et cetera, so forth and so on? That's another aspect I didn't bring up. If you have 50% and you're making loan payments on that 50% and you have a disruption in your income, that's going to be a lot easier to handle than if you have loan to value of 100% or 90%. Are you fucking kidding? No debt. The Alpha Male 2.0 has no debt, barring those two very rare exceptions. You don't want debt. If you have debt, you are not free. Alpha Male 2.0 is about freedom. You can't be free if you have shitloads of debt. Even if you make a lot of money, even if you have your own business, even if you have multiple women on rotation. I know guys with very high incomes who have massive amounts of debt. These guys are not free. I'd rather you have a good income and a good woman life and have zero debt, which is what I've got. It's awesome. You want more information on this? Join smic.com. That is my membership and coaching program. I will see you in the next video. Bye.